Tuan, it's the groom side's done very well, the bridal side's not.
I know. I won't take it personally.
All right. Well, we don't have any microphones, but that's because it's nice and small and intimate. But we'll kick off. We'll just do some introductions and then we'll get straight into it. So, I'm Shane Deane. I'm from Dye Co, registered liquidator. So I deal with the tax side of stuff when Olga and Tuan are not successful, or it's the businesses that they see not viable.
I'm Olga Koskie from Tax Assure, and we deal with the tax debt when it's undisputed. So no one really likes it, but if you accept that it's there but you need more time to pay it, or you want to get rid of the interest and penalties, that's where we come in.
And my name's Tuan Van Lee. I'm from Aptum Legal. I was at the ATO for 12 years previously. I used to manage its litigation department in Melbourne and Tasmania. And I was also a judicial registrar of the Federal Court for a couple of years. But now I've gone into private practice at Aptum. And we deal with disputed debts. So if you want to lodge an objection, go to the tribunal or the Federal Court or defend a tax debt matter, that's what we specialise in.
Right, cheers. Now, Tuan, we'll stay with you for a minute. So the ATO at the moment, obviously, they're pretty active. But has there been a change in their approach to debt recovery of recent times?
Yeah, so during COVID, there was pretty much a moratorium on ATO debt recovery. So for that 2-year COVID period, they had about 6,000 ATO staff, modify their roles from whatever they were doing normally into helping with JobKeeper and cash flow boost. But basically, since May this year, there's been a change in senior leadership at the ATO. So the former Deputy Commissioner was effectively moved on. And somebody new has come in and has been acting in their place. And since then, we've seen proceedings, debt recovery just skyrocket, pretty much since May.
Yeah. And are you seeing anything different, Olga, in your space?
Yeah, absolutely. In some ways, it's more aggressive recovery. So the message previously and during COVID was we're here to work with you, whereas now the message is you need to pay the debt now unless there is an extreme circumstance as to why we should take into consideration a payment arrangement. We're seeing very quick recovery action. So before it gets to the proceedings usually that Tuan's talking about, we're seeing a lot of director penalty notices being issued. We're seeing credit reporting notices and credit reporting issued to credit reporting agencies if clients have outstanding debt. And wind-ups are coming, which I'm sure you're seeing much quicker.
Now, I should have mentioned at the outset too, feel free to ask any questions as we go of anyone. Like it to be interactive, that way you don't have to sit there and listen to us the whole time. So you mentioned a couple of the debt recovery tools. Are you seeing them just being used more, or are they expanding the scope of the tools that they're using?
Both. So we're seeing an automation side of things. So normally before a director penalty notice would be issued, a case officer would look through a file and determine whether or not it was a viable and a relevant matter, whereas now it's automated. So computers are issuing those director penalty notices. So you might have, your accountant or even you might have spoken to the ATO and told them that you're working with them or you want to pay or have voluntary payments, but that's not enough at the moment to stop the recovery action.
Yeah.
So, and just with that, so we do a lot of FOI in our space, and we've been able to get a couple of the DPN procedures. And what it is showing is a level of automation. So, as Olga mentioned previously, a debt case officer might take a whole day to do 2 director penalty notices. So they might look through the file, they might do the calculations, do the worksheets, prepare whatever's necessary to make sure that's the next right step to take. But from what we've seen, they have a one-touch button now where they can basically generate a director penalty notice automatically. And I call them these kind of mass awareness campaigns, which I had never seen when I was at the ATO, where basically they are able to issue thousands upon thousands of notices every day. And that's what we're seeing, kind of flood the market a little bit.
And that's the communication as well. So when you look at the press statements and the communications and interviews from different assistant directors and commissioners at the ATO, they're now talking about exactly that, how many DPNs are issued in a day. Their legal spend, the last that I saw was publicised that they had 86 million in their legal budget for recovery. So I think that in itself shows the mood, so to speak, that it is now about recovery and huge focus on compliance.
Yeah. Yeah, and it's interesting, since the advent of this automation process, the DPNs that come out, they used to be watertight, and you'd get there and say, yep, you go through their lodgement history, double check that the ATO got it right. Now we're seeing the DPNs and they're not even close to correct. So some of them are considered lockdown notices, but they're not lockdown notices because the ATO's got it wrong. And the opposite's also true, where you've got a non-lockdown where it actually might include lockdown debt, which is great. That's why we get Tuan and Olga involved when those things happen. But it's important to have a look at those. But I guess the message from the ATO with all of these mass awareness campaigns, and it's been that way for a long time, but they're driving it really hard now, is compliance is key. And the more compliant you are, the more likely you're going to have successful payment arrangements. Obviously the dispute space is slightly different, but your compliance history is still going to come into how the ATO treats you. And we definitely see it on our side if we're trying to propose a small business restructuring plan, or we're trying to do a voluntary administration into a deed. Compliance is one of their first boxes that they want ticked before they will approve that plan. And if there's been non-compliance, they want to know why. So that's been just a continuing message for a while from the ATO. So that's how aggressive that they are at the moment, and the tools that they're using. What do you see happening over the next, say, 6 to 12 months?
So in my space, it's really difficult to get a hold of an ATO officer and have a meaningful discussion with them. It's really difficult to speak to an officer who actually knows about the laws that they're applying or whatever notices they're sending out. So what we're finding is we're effectively getting funneled to the call centre where they're given scripts about what to say. And actually, it's in litigation where we're actually getting some results because we're actually able to speak to somebody, which is quite strange. It's a quite strange world. So I think in the next 6 to 12 months, I think the ATO will continue to take an aggressive approach. There was a speech from the Commissioner and the Deputy Commissioner of Debt to the Tax Institute in September. And the language they were using was, we have to level the playing field. People are treating the ATO as a free loan, basically. So I think in the next 6 months, this kind of aggressive action will continue. But I think ultimately the ATO is not going to be able to cope with the complex matters. So it may be that when you're dealing with matters where you've got a taxpayer who doesn't dispute the debt and wants to enter into a payment arrangement, they're going to be hard to deal with in themselves. But the hard matters where you actually dispute the debt, we're seeing in objections, it's taking at least 6 months to determine an objection. It's taking 2 or 3 months to even be acknowledged that an objection's been allocated. In litigation, I caught up with someone the other day. They basically said that there's too many debt litigation matters to allocate to internal ATO officers. So they don't know where to give them. For the first time, we're actually dealing with debt officers in legal proceedings directly. Typically, when I used to manage a department, every time there was a litigation matter where a representative was appointed, they used to actually appoint an internal ATO lawyer. We're not seeing that happening right now, and I think it's just because they can't manage with the flood after 2 years of really kind of stopping recovery.
And the debt matters that you're seeing coming, Olga, are we talking historical debt, like age debt, or is there some fairly new debt that's been brought in?
It's mainly historical, but on top of that, there's also new debt. So most of our clients have got historical debt, but they haven't actually been able to catch up. And so then there's recent BASs and recent debt that's on top of the historical debt. And as we mentioned before, one of the biggest things the ATO are looking at is compliance. So if there's been late lodgements, non-payment of ongoing lodgements, and then the second factor they're looking at is ongoing viability. And one of the things that some of the officers are saying to us is that they want to draw a line in the sand. So even though a company may now be viable because of both the historical debt and the recent debt and the debt increasing. The ATO don't like it if the debt continues to increase, rather than companies stay alive when they're very viable and their payment plans that we would have said it is absolutely going to be accepted. In some circumstances, the ATO are now rejecting those payment plans purely based on the level of historical and new debt, and saying we're drawing a line in the sand. We need to protect ourselves from increased debt, and we'd rather see employees no longer have jobs that they're super outstanding than continue to roll the dice and give them another chance and another payment arrangement and a chance to increase that debt.
And one thing that I tell people, try to get them to understand the system. See, the ATO is like this huge machine, and nobody quite knows where to get the transparency. How do you actually speak to somebody directly, engage or whatnot? But the reality of how they stream their cases is, because there are so many cases, they have a system called Siebel, and in terms of allocating to debt officers, it basically, the system allocates the next matter to them, right? They don't get to choose which cases they take on unless you're in the more aggressive area of the debt area. And what's important there is to understand that every touch point that you make as an accountant, as a representative, gets recorded onto the system. So anytime a debt officer makes a decision about a payment arrangement, they're looking at the notes. And so why it's important to see specialists like, Tax Assure is these guys, they deal with it all the time. So they're going to know exactly what the parameters of what the ATO is going to be willing to accept or not are. And the thing is, I see a lot of times where accountants will think, okay, well, my clear next step is to do a remission of GIC. My clear next step is to do a payment arrangement. They don't necessarily look at the whole history of the file, and then they just shoot out one and it gets rejected. It's super difficult once you have a rejected decision to have another officer look at it and make a decision accepting what you're putting out there. So people have to realise the whole history is important, because every decision counts in the history, and every time a decision is made, that ATO officer, who's never picked up the file before, most probably, is looking at those previous decisions.
And even with the change of guard, as you said, there's different levels of expertise. So we're seeing a lot of new debt officers and new case officers, and what they will do is they will just see that there's been a refusal. So where accountants often will ring up, don't get the answer they want, hang up, ring up again, don't get the answer they want, hang up, and do that sometimes 5 times in a day. And in the past, sometimes they've been successful in doing that. That's 5 refusals. And so when you've got new case officers or new debt officers that pick up that file now, they don't have the expertise, they don't have the knowledge to understand how to review a new proposal, and they will just say, no, you've had 5 refusals, I'm now refusing this application. So it's making things much, much worse instead of getting them to where they want to be.
Right, so we covered off, we'll talk about compliance, and that's definitely something the ATO's been driving. And I mentioned lockdown and non-lockdown, but do you want to just so everyone's familiar, do you want to explain the lockdown versus non-lockdown
I just found
director penalty notice?
I just found out Adam Craig's in the room. Adam's a barrister who was at Treasury previously and helped pass some of these direct penalty laws. So the difference between standard and lockdown. Okay, so with director penalties, the broad scheme is that if you're a director of a company, you're to cause the company to comply with certain obligations. A director can be made personally liable for PAYG, pay-as-you-go withholding, GST, and superannuation guarantee charge. I call them standard DPN liabilities. If the company lodges their BAS within the first 3 months of the due date, I consider them standard, except for super. Super's, it's a superannuation guarantee statement, which is another thing. But if they lodge within 3 months, it's a standard director penalty liability. So if the director gets a director penalty notice, or before receiving a director penalty notice, causes the company to do one of a couple of things, either pay the debt, appoint an administrator, voluntarily wind up, or appoint a small business restructuring practitioner, that personal director penalty liability automatically gets remitted. The difference with a lockdown is if the company lodges its BAS after 3 months, that remission option is no longer available. The only way to comply with the director penalty liability is to pay the debt. And what happens is some directors don't know, and so they lodge after the 3 months and they get a lockdown penalty that follows them for the rest of their life until bankruptcy or until death. And what's happening now is the ATO is actually taking people's refunds from their income tax returns and applying it to these director penalty lockdown liabilities without issuing legal proceedings. So you don't have an opportunity to defend in court. Now, Adam's going to tell me, but there's a section 269-35(4)A, which lets you write into the Commissioner to say that a defence applies within 60 days of receiving some form of notice. But the lockdown director penalty, it came into play in 2012. I think it's made a significant impact upon the director landscape. Like, you know, it's something you have to seriously think about if you're going to agree to become a director of a company.
And we see a lot of people that they've ignored the debt for a significant amount of time, which I'm sure you do all the time. And they believe, because the guy at the pub told them, that you can just liquidate the company and it'll just go away, because that's what the guy at the pub did. And that there's a magic wand and that will just make everything go away. So can't we just get rid of the debt as well?
You know, and that's what it comes back to. It's more important now to do the upfront due diligence on a client and just to make sure that it's lockdown or non-lockdown or standard and lockdown DPNs, because if you're going to talk to someone about a liquidation and it's only tax debt, but they're all personally liable for the tax debt, well, then it's a different discussion. It's either a bankruptcy discussion or avoiding bankruptcy discussion, and it usually ends up with one of these guys to either dispute or negotiate.
Well, I'll just say too, we're also seeing a lot of recovery action happening on DPNs that were issued as far back as 2018 for companies that were wound up. So We're getting a lot of clients at the moment between 2018 and 2020, which is when the debts occurred or when their companies were wound up. They were directors, there were lockdown DPNs, they completely ignored them at that particular time, or they were personally liable, and now further recovery action is coming back on them.
Yeah, and we're seeing that in legal proceedings, you know, going back as far as 2015. And it gets really difficult to get information regarding that. Like, a lot of these directors have even forgotten about those periods.
Yeah.
So the question is, well, how do I get information? So, you know, we lodge FOI requests, but where a company has been wound up or deregistered, the ATO actually has been refusing to give documents on the basis that the authorised officer of the company is liquidator. And some liquidators, and so even if the liquidators,
It's horrible.
yeah, so even if the liquidators consent, there's an actual section in the Tax Act that says consent is not enough to get over the secrecy provisions or the disclosure obligation. So the ATO, it's a weird position where the ATO is threatening to sue a director, a former director of a company, but you can't get information from the ATO about the company. You can only get the bare minimum, which is a statement of account with the director. But eventually we say to them, but if you're going to sue them eventually, we would have a right to those documents in court. So why don't you just give it to us now? But it's actually really difficult to get somebody to understand that. And so what position are these directors in? Like, you get served with something that you thought was over or you might not have received any notices about for 5 years. And now you get hit with a 200, 300 grand debt and you can't actually get information to know if you're going to dispute it or not. It's really difficult.
Yeah. Yeah, and we've seen even ones that have been dealt with either under a deed of company arrangement or had gone through a liquidation process and they were previously non-lockdown DPNs, that the ATO has now chased them for those debts under a DPN, and started issuing proceedings. It's only when you bring it to their attention that they've issued it incorrectly. So just be vigilant on the stuff that comes in. It's not always, especially at the moment, it's not always right. All right, so in the dispute resolution area, what are some of the options and tricks that you're using to help your clients?
Look, there are no real tricks. It's the first thing is getting all the relevant information to determine whether they have a defence or not. To be honest with you, most of the time I will refer clients to people like Shane or Olga, because that's, when it comes to litigation, it can get pretty expensive, and ultimately the Commissioner has all these powers in their favour. So I guess it's about knowing what the client wants outcome-wise and knowing what the options are out there. Something we'll talk about a bit later, small business restructuring, which I think is a fantastic thing being used right now. I think it's super important to enter into payment arrangements and make sure that you're compliant as possible. The thing I get all the time from clients is, Tuan, I'm happy to pay the primary tax, can you just get rid of the interest and the penalties? And it's just not that easy. Like, the ATO is not a commercial creditor, and so we have to do, we either have to find a defence to give rise to litigation risk, where we get an outcome that's less than 100 cents in the dollar. So to give you an example, if the ATO forms a view that they have a 50% chance case of winning a case, you can try to settle with them on the basis that the litigation risk is 50%. And so if the tax debt is $1 million, they have the power to accept 500 grand in full and final settlement. So that's the kind of stuff we deal with. Or we try to dispute the debt to reduce the primary tax or the penalties, because once there's a debt on the system, as Olga would find, they just look at that headline figure and they don't care. That's the amount that they're chasing, and all the laws are in their favour in that regard.
Yeah.
So
Sorry, can I just ask, do you have any advice on disputing interest for smaller debts? So say self-employed clients, not $1 million tax debt, say 50,000, that kind of thing. Is it worth sort of going down that path to try and dispute smaller amounts?
So that's often where we come in, but we wouldn't necessarily call it a dispute. So rather, the powers that the ATO have are to remit the interest and penalties, and there's certain guidelines and legal practice requirements of the factors that they're allowed to take into consideration when remitting that interest and penalties. And so the process around that is that preparing detailed applications that cover off those grounds, so that the ATO and the officers can take into consideration what they're allowed to remit it. But it's not disputing, per se, the actual interest component.
Do you think it's worthwhile going down that path for small amounts, or...?
That's why we exist, for small amounts and big amounts. Yeah, so absolutely, if there's grounds. So it's much harder, it's not a phone call. I wouldn't say at the moment you could ever just pick up the phone and say, Mary's a great person, she's gone through difficulties, suffered through COVID, can I please have my interest and penalties? That won't work at the moment. But yes, with the right grounds and the right application, 100% it's worthwhile.
And what people don't realise is, with debt officers, they have the delegation to reject, but not necessarily the delegation to accept. So, for example, if you're dealing with an APS 3 officer, they might have the delegation to remit GIC of 50 grand, right? But they have the delegation to reject any GIC request. So when you're dealing with the call centre people,
You have to be careful.
you have to be careful, because most of them don't actually have the authority to accept a remission of a certain amount. That's why it's worth it to see a specialist like Olga, pretty much.
And sometimes we'll hear stories from different people that they've got what they thought were their tricks. So you ring up on a Friday afternoon and they'll just give it to you because they want to get you off the phone. Or you ring up on a Monday morning. But what can happen in those circumstances is exactly what Tuan said. If they do want you off the phone, they'll reject the application. And then what happens is when you ring up again, the first call note, or when you actually lodge an application, the first call note will say rejected application. So then you're starting from so far behind the 8 ball, especially with new staff that are running off scripts that don't have the same knowledge because it's already been rejected.
And in regards to the GIC and the penalties that the ATO kindly add on for late lodgements and not paying on time and things like that, historically they used to quite often just waive those out of the gate. Is that happening at the moment, or does it?
No, so they would never necessarily just waive them straight away. Maybe on those smaller debts they might have. But what we're seeing now is it's much, much harder than it was even 6 months ago. We still will make an application earlier than the full debt being paid off. A lot of people think that if the full debt's paid off, it's an automatic given. Once the debt's paid off, that they'll remit the GIC and you can get all of that back. It's not a given. And at the moment, that's absolutely changed. It is not a given at all that if your debt's paid off, like Tuan said, they consider the full amount a debt. And we will make applications much earlier, but what we're seeing now is that they need to see compliance and they need clients to be in a compliant position before you even start to talk about a remission of a GIC.
And in terms of a lot of the ATO debt, people want to refinance. A lot of banks, it's your first tier, and a lot of your second tier will be sitting there saying, well, unless the ATO debt's cleared, we're not going to deal with that. So how do you get involved in that to help them out through that?
Yeah, so there's a couple of different ways that we help with that. One is these applications to get rid of the interest and penalties earlier. So once they're in a compliant position, then we can apply to get rid of the interest and penalties, which can then reduce the amount of the debt, which then reduces the lend. So then that helps with their LVRs. And some lenders want to see a client compliant. So the other thing we do is work with the lender and the client to get them into a compliant position, because then once they're in a compliant position, the lend can go through.
Yeah.
The other important thing, which I think has changed along the lines of what we were saying, the ATO recovery is more aggressive and more automatic, is we used to speak to a lot of people where they'd say, I'm about to refinance. Or we'd speak to referrers and they'd say, look, the client's going to refinance in 2 or 3 months. We've told the ATO that we're going to have funds, it'll all be okay. Our position now is it won't be, and that you should at least be in a short-term or review or interim arrangement in that 2 or 3 months before you get the finance. Because what we're seeing happening is if you're not in a payment plan, you're considered to be non-compliant. And if your debt is over $100,000 and more than 90 days overdue, you can be reported to credit reporting agencies. And we're seeing that happen on the day that the warnings expire. And we've seen it on some cases without any warnings at all. So if a client is looking to get that finance and they're sitting unprotected because they're non-compliant and not in a payment arrangement for 2 or 3 months, if they're reported to a credit reporting agency, your finance isn't even going to go through. The whole thing will fall apart. So they need to be protected, which is where we come in as well. And that also works sometimes for liquidations. So sometimes when clients are weighing up their options, do they want to liquidate? Do they want to refinance? Do they want to dispute? What do they want to do with the debt? And we've done it with some of Tuan's clients and we've done it with some of yours. We'll get them into a compliant payment plan in the interim so they're protected whilst they've got time to seek the advice about the next steps.
And you know, what we do is it's not mutually exclusive. So, you know, going back to my example before, imagine there's a massive case pool, right? If your client doesn't do anything, there's a chance that one of the automated processes or one of the mass awareness campaigns picks them up, and then basically it streams them to the next stage. When you're in a payment arrangement, and what Olga was suggesting was a review arrangement, which is it's like a short-term arrangement where you agree to pay a certain amount. You put your client outside of that pool. So it means that they're less likely to get the credit reporting bureau letters. They're less likely to get garnishee notices and director penalty notices. Sometimes you have to do multiple things at the same time. So say, for example, when I'm going back to the $1 million tax debt, you might have $1 million tax debt. You might have 500,000 of that's disputed. If I lodge an objection for your client, that 500 grand gets treated differently to the undisputed debt. A dispute indicator gets put on to the disputed debt. 80% of disputed debts they don't chase while you're going through the Part 4C process. And then Olga can deal with the undisputed part in terms of payment arrangement. And ultimately, if you have a company that can't, I guess, trade out of its position, you want to see someone like Shane. But Shane also has to sell the restructuring plan and say, well, the business can trade out of this or can continue on. So they do look at the compliance history when they're looking at that. So there are matters where, you know, all three of us together will need to work in order to get a result for a client. You know, that's not kind of liquidation or whatnot.
So what? So directors and by extension the advisors, what should we be telling them to look out for? From a risk perspective for the directors associated with the ATO stuff.
Yeah. So right now, I think a lot of the decision making is being automated through parameters, right? So I'll give you an example. So from what we've seen, before they issue a director penalty notice, the ATO's procedures will say you have to give them at least one written letter and at least 3 contact points, right? They also say that a phone call to the tax agent is a contact point, even if the tax agent doesn't pick up. So if you have a missed call from a private number and they're speaking about your particular client, that's 1 contact point already. They can try to call you 3 times in one day, and that's already 3 contact points. And then they stream.
It could be the wife of a tradie who does her books and has listed herself as the representative for the company, and she could get a private number missed call at 7:30 in the morning, and that's a contact point.
Yeah, and once they do 3, that's it. They can move you to the next stage. The next stage is an automated DPN. So what I say to advisors is, firstly, whatever contact you get about your client is super important for the client to know, but it's really important to think about where you are in the process of the ATO, because all the departments, you're not going to have one officer unless you're in the strategic debt area. You're not going to have one officer dealing with the whole matter. It's literally, they just look at what they do as their day job, and then they pass it on to the next person. They don't care. And so what I would say to advisors is be really careful about the kinds of communication you receive. If you're receiving letters and they use a colour scheme for it, so if you receive a red letter, that's meant to be really, really bad. And if you receive like an orange letter, it's meant to be less bad, right? So,
Yep. I haven't seen blue letters. I don't know if they're doing blue at the moment.
Blue is like the lodgement.
I know.
Yeah. There's still some blue ones coming through, but
Yeah.
they're
We
mainly
don't see
orange
the
and red.
blue.
No, we don't see the blue.
But once you see those and they're not responded to, if they're not responded to by the timeframes that they say, you can just assume it's going to be streamed to the next stage, and they're never going to stop. Like, it might take 2 or 3 years, but eventually you're going to end up in court. The other thing I want to say too is a lot of these notices make your client do things within short timeframes. Like an estimate notice makes your client do something within 14 days. But the ATO knows it takes 7 to 10 days for letters to go through the post. I mean, that's why the Evidence Act was changed during Corona, because they know that Australia Post doesn't deliver stuff quickly. So you've got DPNs which require you to do something within 21 days. The DPN is deemed to be served as soon as the ATO puts it into the postal system. Your client doesn't get it till 10 or 11 days. They come to you 7 days later going, gee, Olga, what's this? Shane, what's this? You've literally got 5 days to do one of those 4 things I talked about. You know, to appoint an administrator to wind up, it takes time. And so what I would say too is you get something like that from a client, you've got to really think about, you know, you don't want to get into trouble of potentially being negligent down the track. You've got to think about whether you have the specialist expertise to deal with it straight away.
And that's why there's frogs on the table. For the saying around you have to eat the frog. So you've got to do the thing that is hard or that you don't want to face and you just keep putting off. And the saying around eat the frog, but eat a nice frog. And think of us when you're eating a frog. You can't ignore this stuff. And I hear all the time, oh, well, I didn't give it to a liquidator because they couldn't do it in 5 days. They can. They can absolutely, that's their specialty, right? Everyone only has 21 days when you get a DPN. Or we hear, oh, it's too late now because there is a DPN, I don't want to wind the company up, there's nothing else that can be done. Exactly what Tuan said, don't ignore it. That's, if there's one takeaway, eat that frog and don't ignore whatever the bad thing that's coming for either the client or whether it's you or whoever might be in that position, because there are people that are used to acting very quickly and that can get different solutions that you might not have even realised that are available.
With all the things you've been pointing out, is there do you have a flow chart where you're sort of like step by step saying, all right, this is what level you're at, next step is, you know, contact Olga, and the next step is go forward, and, you know, as you're going through the stages in terms of, as you say, the red letters and the orange letters, etc., where you're up to and trying to assist, you know, I suppose accountants that know when they should be contacting you at what level and what stage?
We don't have a flow chart, but jump in if I'm wrong. The simple answer is if the company or the person with the debt is viable and they've got funds coming in but they need time to pay off that debt, they need breathing space and they're not disputing the debt, then that's us. If they want to stay, the company wants to stay viable, wants to keep trading, isn't in an insolvent position, money's coming in, but they want to dispute it, they say, no, that is wrong, that's Tuan. And then when they're like, it's all too hard, all too much, no money coming in, we're screwed. In a summary, that's Shane. But I suppose the exception would be small business restructure if you wanted to go through,
So
that.
the ATO's now got they're supportive of a thing that's been brought in during the pandemic, which was small business restructuring, and effectively what that allows, it's a very different type of insolvency model where we're appointed, but we don't have any control over the day-to-day operations of the business. The directors stay in control, which is great for the directors, mostly. But what's been very good is the ATO are very supportive of it. And unlike every other external administration that we do, whether it be a voluntary administration, deed or anything, I can actually pick up the phone to someone in their small business restructuring area and say, this is the plan that we're thinking about putting together. We'll send it to you in a draft. What do you reckon? And they might come back and say, we don't like that, we like that, we don't like that. And we can work through and try and find a result that's going to be in the best interest of the company. Underlying, though, the company has to have some sort of viability, either but for the ATO debt or but for a certain thing that has recently happened. So obviously COVID was one of those things that recently happened. So there was a lot of businesses that were able to utilise this small business restructuring plan. It didn't get taken up for a while. People said that's because it didn't work. It wasn't because of that. It was because there was no work for it to be used. But now the ATO is quite active. We're able to do those more. And you talked about before about acting, being able to act very quickly. Tuan knows one of the ones. Referred to me on a Thursday. We got appointed as small business restructuring practitioners on a Friday because that's when the director penalty notice was going to run out. And there'll be a decision tomorrow as to whether that plan's accepted. And I got off the phone with the ATO yesterday who said that they'll support it, but they need to see one or two more things, which we'll give to them this morning. So that system does work, and the fact that the directors get to stay in control, it's very palatable to them. They really like it. I like it because it hives off my trading risk, and it also keeps the cost down, where in a voluntary administration, normally if we're going in trading, I'm going to put in overlays, policies, procedures and all sorts of stuff to have certain levels of control because I'm personally liable for everything that we do. And therefore there's a cost saving in going through that small business restructuring process to achieve a similar outcome. There is some limits on it though. Currently you can't have debts more than $1 million. Your super and employee entitlements have to be fully up to date at the time when you issue the plan, and your tax compliance has to be up to date. So when we get appointed, it doesn't have to be up to date at that time. It just has to be up to date at the time we do the plan, which is in 20 business days of an appointment. So on the one I was talking about with Tuan, he had a combination of dispute and questions about previous tax advice that he got. So we took the appointment, he put an accountant in place, got all the lodgements up to speed, did the review of all the past BASs, lodged amended BASs, and got the super sorted out all before we went into the plan phase. We're now in plan phase and we should have a good result on that tomorrow. The great thing is that it's very, very well supported by the ATO, and I think that's one, they like the process. Two, they were part of the architects of the process, and I think the last stats were like 92% of the plans have tax debt, and they're supporting a similar number. So it's a very good way for a viable business to continue to go forward. It's something that we're seeing a lot of, and Peter, I'm sure people in your office are doing the same thing. A lot of people are doing small business restructurings now because, yeah, it's a very good outcome. There's talk of it being expanded, and I hope it is. I don't see why it needs to be capped at $1 million. It doesn't tie into any other small business definition across any of the other taxation classes. It'd be nice to get less than 7, I think, separate small business definitions, down to, let's take it back down to 6. And that way we could, if it went up to 6 million or 5 million or whatever the number they're going to choose is, it means that small businesses might be saved through restructuring that way.
I think too what it shows, what we've all been talking about, is there isn't necessarily a one-size-fits-all solution. But if the right people are looking at it, then there are ways that businesses can be saved or helped, either in short periods of time or when they feel like there's nothing else, again with people working together in different ways to get them the outcomes that they need.
And to give you an idea too, like in terms of, like you asked about the flow chart, and the answer was correct insofar as there's not necessarily a flow chart, but it doesn't really matter who it comes to, because there was one, it's only recently come back into our purvey, but it's someone that contacted us initially. They had a lot of government contracts which had all the termination clauses in it. around voluntary administration or any type of external administration. So an SBR would be an external administration for that definition. I don't agree with that, but that's a whole nother 5 hours of me ranting. But they come to me and they had tax debt that they just needed to, they really just wanted to buy time so that their new contracts coming in were going to then be able to make them more viable going forward. So I'm looking at that going, yeah, but if you appoint me, your business turns to mud. So I went to Olga. Olga's looked at it and then they've gone, in amongst all this, oh, there's some dispute here around some of the tax debt. So then Olga's referred that component off to Tuan. And then Tuan was dealing with it, and as it's going through, then the ATO started issuing notices because it wasn't happening in a time frame, and there was a combination of disputed debt and non-disputed debt, so they started issuing notices. And then so Tuan sent it back to us. So it doesn't really matter who it comes to, the process from there will be the same, but the main things to look out for, if you're getting orange notices, that's a really good time to be acting, because if it's an orange notice, there's already a non-compliant component, and before the red notice gets issued, because once a red notice is issued, it'll give you 21 days at best. So if we can get whilst there's an orange notice, we have much more ability to either restructure, negotiate, dispute in a timely manner before it goes to any escalated position.
What was their stance pre-COVID? Were they this aggressive?
No, pre-COVID, they weren't anywhere near this aggressive. They still had a very strong compliance focus. So if you were non-compliant, they were aggressive, but if you were trying to be compliant or were somewhat compliant, they were much more lenient in how they dealt with you. They were trying to find outcomes with you, but still keeping a little bit of pressure on.
And there wasn't the level of automation. So there was more judgmental decisions. So decisions were made on a file by a human with consideration, whereas now we're seeing a lot more automation for the recovery.
Yeah.
The book debt is bigger. It's bigger than it's ever been. So it's currently $50 billion with small business representing $33 billion. Yeah, I've never seen this level of automation. And to be honest, it really concerns me because what we're seeing is some of these decisions are being made on the basis of automated data widgets. So debt officers will refer to a financial capacity rating, and we don't know where that's come from, right? And I suspect what's happening is the ATO has data from many sources, and they're creating internal programs to help their case officers with decision making. But the problem from an administrative law perspective is, how do you know that the algorithms and the data that they're collecting are correct and give a meaningful picture? Like Shane might look at a financial statement of a company and form the view about the solvency of the company, but how do we know that the algorithms that the ATO is using to form those views are correct or not? It's a massive issue. It was in Robodebt, and there's a chapter in Robodebt where Justice Holmes recommends a new body to be created to look at this. Automated decision making is becoming more and more prevalent. So ASIC have actually, one of the things that liquidators have to do is they have to do a report and then lodge it to ASIC, to some program, and then within like 5 seconds it comes up, we're not going to investigate, this is green or whatever. And there's been complaints made about that because a human's actually not making that decision. There's a section which says that a decision made by a computer, by ASIC, is effectively an administrative law decision. But I don't know if the ATO has turned their mind to this problem yet. To go back to your question, I've never had a circumstance as now where you just can't speak to somebody, you can't actually ask for a meeting. It's all hiding behind policies and procedures. To go back to that request for a mission point, from what I've heard, they've been saying to people, we're not going to remit GIC anymore unless there's exceptional circumstances. Now, the law doesn't say exceptional circumstances. The law says if it's fair and reasonable to remit. The law says if circumstances contributing to the delay of payment are beyond the control of the taxpayer, the commissioner must remit. And then there's a section that says if there are special circumstances. So one thing that concerns me is because of the lack of capability and because of the departure of a lot of senior debt staff, instead of having this circumstance by circumstance decision making, which is a requirement under the law, we're getting this automated mass decision making, and it goes back to what I was saying before. It's really difficult when you've got a complex issue or something that's not straightforward to actually resolve it with the ATO right now. And I've never seen that before.
Can I just ask about the repayment plans? I've heard that the repayments are quite aggressive. Are you able to negotiate or speak to the ATO about what the repayment should be, or do they have a formula that they use for?
So that's usually us as well. So we wouldn't agree to their formulas, and the way that we would do our applications are in a way that it meets a client's cash flow. But what we are hearing, and this is because we do it all day, every day, so we understand what can be accepted again, or what the law says can be accepted, what can't be accepted, and our proposals match the law. And so they're written and submitted in a way for them to be considered in a very specific way. But what we are hearing from other people and accountants and bookkeepers and individuals that are trying to do it themselves is a large upfront payments being demanded at the moment, between 30 and 50%. None of our applications, unless they're very, very close to wind up, would ever include an upfront fee. But I think, again, it comes back to script-based. So what we're seeing is there's a general script, which I think potentially is that formula you're talking about how much they want upfront and how much to be paid over what period, and that's where the specific and detailed applications come in that we prepare, so that our applications still fit within the law. They're still capable of being accepted, but they're not necessarily the scripts of what we're hearing the ATO saying.
Yeah, because I think, I feel the pressure that they put on the clients to take a different option rather than a payment plan because of the upfront amount that they're asking for. It doesn't help them get their money nor help them to live. So that's why I wanted to know if you were able to, in certain circumstances, negotiate or put a proposed plan forward. That would obviously help the clients.
Yeah, absolutely. And it can be really scary. So we deal with these officers all day, every day. But when a client isn't used to a government authority ringing them, and sometimes it can be quite aggressive about what they must pay, and then the consequences of not paying them, for individual clients hearing these things about either being made bankrupt or losing your house or the company going into liquidation, we're seeing people agreeing to things that just to get them off the phone because they're scared.
Olga, when you're saying that, in terms of payment plans you've been doing where people have not had to make the upfront payments, similar to payment plans that if you're doing as accountants, it might be like a 12 or 24 month at the absolute maximum. Do you have varied terms that you're able to work within longer periods, or?
Yeah, so we're still seeing almost 3 years of payment plans, and again, it's not cookie cutter. So we wouldn't get a debt and just divide it by 12 months or divide it by 24. But again, there's submissions on how we're putting the payment plans. So yeah, we're still seeing longer plans. They're not easy. It's not a 5-minute phone call. Most of our clients are extremely happy with what we do. Once we had a client say, well, that was a 10-minute phone call. Why are you charging me for that? Like, there's no way this was a 10-minute phone call. So they're not easy, but yes, we're still able to get them that fit a client's cash flow, fit where they're at. The only, I suppose, carve out for that would be if it's shocking compliance. So if they haven't lodged on time, their debt's been increasing over a significant period of time, and the ATO sees them going backwards, that's what makes it much, much harder. We're still able to get them into plans. Again, ones that fall over are ones that we've got into, say, 3 plans. We've had some clients where we keep getting them into a plan. Every time a BAS comes up or every time a payment comes up, they default. By the time you've got to about 3 or 4, at that point, the ATO have lost patience.
And you do plans as well with like balloon payments? For like a bigger...
ATO don't like balloon payments anymore. You used to, even 2 months ago, we'd be able to get payments with plans that included balloon payments. The ATO are very, very against balloon payments at the moment. The only way that you might even, it's not really a balloon payment, but if it's a review arrangement of what we were talking about, so if a client is looking at getting finance, it's not contingent on a balloon payment, but it's a review or a short-term arrangement that includes the factors of that they're going to get finance.
And see, for me, when you get to my space, we're not getting 3 years. We're got to pay the whole thing in 6 months, 12 months, once you're in legal proceedings. Yeah. So it just shows the differentiation where the client's at, basically.
And small business restructuring plan is capped at 3 years. You can't go beyond that. So if anyone wants to go beyond that, because you can negotiate beyond that, it needs to go through a voluntary administration into a deed, and a deed can be effectively any time frame you want. But the ATO are getting very good at requesting and analysing cash flows going forward. So all the small business restructuring plans that we put forward, if they're coming from future cash flows of the company, we have to cash flow that out over the next 2-3 years so we can prove to the ATO that that's viable and that's going to work.
Our plans need to include ongoing viability as well. So without demonstrating ongoing viability of a company, you won't get a long-term plan.
And coming back to the script that they're running, it's very aggressive at the moment. I've had more than one person that have come to us and we've gone through a liquidation process. One of them come direct, and when they come direct, I'm like, well, how did you get to me? Because most of my work's referral. And they get there and they said, well, we just looked you up because we're speaking to the ATO, and the ATO said we should be in liquidation. So, and that's not just one. They've been speaking to the case operator and they said, if you can't afford the 50% up front,
yeah,
you shouldn't be in business, you should be in liquidation. So that's a very aggressive stance, which has never
we haven't seen that before.
Ever happened before. And they've definitely got a narrative within the ATO at the moment that we're not a bank. So on a number of restructures that we've done, they've come back and said, well, why we're entertaining a 3-year restructure, we can see from your report that they've got property, they've got equity, they should be borrowing it and paying back within 6 months. We're not going to accept the 3 years, so change your plan. So we sent them the draft, they said, no, we're not going to accept that, change it. So they're very, very aggressive, and there's a definite narrative that we're not a bank going through there internally.
And to be honest, there's holes in their scripting. So the frontline officers, I don't know if they actually know the legislation, but I'll give you an example. This credit reporting bureau stuff, right? It's meant to be a debt over 100 grand, a business debt, 90 days overdue, and they're not meant to report if you're effectively engaging. Now, I was involved with the working group and what effectively, the first draft was, if you're not effectively engaging with the ATO, we can report you. And I said to them, what does effectively engaging mean? What they've done now is they've said if you're in a payment plan, if you're in objection, if you're in the tribunal, or if you have an active complaint with the Ombudsman. I mean, we had a situation where we had a client that was waiting on the ATO to respond. And I called them up to say, well, can I just confirm you're not going to disclose the tax debt until you actually respond to us? And they said, no, we can't do that. We can't unless you're actually in a payment plan. It's not in negotiations or whatnot. And I said, but how can we enter into a payment plan if we're waiting on you guys to come back to us? And they said, well, that's not our problem. Call back a day or two before. That's the only thing we can offer you. You call back, it hasn't been allocated, because the ATO will send out these notice of intention to disclose credit reporting debt if you don't do something within 28 days. It takes 7 to 10 days for you to receive that letter. It takes some time for the client to give it to you. How can you negotiate a payment plan in that amount of time, particularly when the ATO, you're waiting on the ATO? So I said to them, okay, well, your letter says, can I seek an internal review? They said, good question. I just, put us on hold for 30 minutes. Comes back, nobody's ever asked about internal review before. We actually don't know how to do it. Like, we don't know what it entails. So we suggest you lodge a complaint. And I said, but based on your notice, the only thing we can do is lodge a complaint with the IGOT. Because if there's an active complaint, you can't report. I'm going to have to lodge to IGOT now. Yeah, okay, well, you have to do what you have to do. You lodge it to IGOT. You don't get a response from IGOT until 14 days later to acknowledge receipt of your complaint. And then 30 days later, you get a response from IGOT. We've checked with the ATO. You never lodge a complaint with the ATO, so we can't investigate your complaint. So we've referred your complaint to the ATO. The ATO contacts you 14 days later to acknowledge receipt of your complaint, but they have a service standard of 28 days. So you actually don't get a response for 3 or 4 months from the ATO to say, oh, we've got your complaint now, we're looking at it. And this is a mass awareness campaign that they've sent out to tens of thousands of people. And there are gaps in it. And the scripting to it when you try to speak to them, they actually don't know the answer, and it's not correct when you look at it.
And so the reason I was smiling, sorry, Mandy, but our head of advisory is here. She's down from Sydney today, and I reckon half of her life is spent talking to these officers, and it depends on who has the knowledge and who doesn't, on where it goes, and the discretion and the understanding of the law isn't there at the moment.
Is there any more questions? Because we can talk about.
We can talk all day.
tax
Yeah,
stuff
yeah.
We can eat. You can eat frogs.
and bore the crap out of you for the rest of the day. But we've touched on all the main points, and we haven't done a deep dive on garnishes or anything like that. But is there any questions at all about anything tax?
Can you please light on how they're reporting the tax debt to the credit agencies now for the repayment that you're talking about? Like it's reporting on individuals or it's on the companies?
The tax debt.
Both. Yeah, it's both. Yep. So we've seen it. I'm not sure if it's mandatory, but we've seen it when there's no warnings, as well as when there's been warning letters. Often a client then doesn't get notification it's happened. Clients then tell us it's suppliers, so whether the supplier has got credit watch or that sort of thing, but often a client won't even receive notification that it's happened. I'm not sure exactly the mechanisms. I'm assuming it's an internal email or special alert that goes direct to the credit reporting agencies, but it's happening almost the day after the warnings expire.
The problem I see with the credit reporting stuff is there's no actual legislation that says the ATO must report credit debts to, a tax debt to a credit reporting bureau. What it is an exception to the secrecy provisions that say that they can, subject to certain criteria being met. And for sure there will be cases where the criteria is not met. And I think in future somebody is going to have a business that is irreparably damaged as a result of the credit reporting, and somebody's going to take it to court and challenge it. It'll be really interesting to see what happens, because if the criteria is not met and they've disclosed a tax debt and it's caused damage and there's no positive obligation to disclose a tax debt to a credit reporting bureau, theoretically that's a breach of the secrecy provisions.
But it'll be a couple of years before we see that judgment.
Yeah, probably a couple of years. Yeah.
Also, if there's too much of that going on, this credit reporting that's by client justified, it'll get to an equilibrium point where credit officers will say, well, okay, it's just one of these, it's no doubt it's an error. In other words, they won't have the impact.
And that's the thing. So actually when the credit reporting stuff was being developed, one of the main principles of credit reporting bureaus is that they don't change their credit reports very easily. So if you had a judgment debt, for example, you effectively had to get a court order to get them to remove the judgment debt. In order to push this, the ATO only negotiated with credit reporting bureaus who are willing to change the record within 2 days of them notifying them. So that's extraordinary. Like there's no other debtor who has that. That's their alleviation for if they get it wrong. That they have not a power, but they can request the credit reporting bureaus to change it within 2 days. A lot of the credit reporting bureaus refused. And then one of the credit reporting bureaus didn't refuse. They got all the tax debts, and now all of them are jumping on and signing up to it.
And it's often quicker to negotiate a payment arrangement and get a client into a payment arrangement and a compliant position than it is to try and get a credit reporting notification removed that was incorrectly put on. So our default would be to get them in an arrangement quickly, which we can do in a week or so for urgent matters. It's normally 3 or 4 weeks, but we've done it in a week, and that's quicker than trying to go through the whole process of this should have never been reported in the first place.
And I just want to make a point about some of these mass awareness campaigns, because they're not just all director penalties and credit reporting bureau. There was one that was done in WA that was targeted to labour hire firms, and what they were doing was changing certain labour hire firms from PAYG withholders that were small or medium to large, right? Now, under the legislation to do that, the Commissioner has to give notice and to give the taxpayer 2 months' notice before doing that. Because if you change from medium to large, it's a huge impact on your cash flow. You're going from a monthly remitter to a weekly payer and remitter at the same time. we had a client who we lodged an objection regarding this about, and then we asked the ATO to produce a copy of this notice, and it turns out they gave us a copy of a template letter, and they said, we don't have a copy of what was issued, but this is what would have been issued. And the letter had X, X, Y, Y, all these variables. And, you know, we said to them at the time, you know, this is a statutory notice you have to give before you can actually change a taxpayer to this other status. And they had no record of it. And they said, no, what we do is we send a copy to the tax agents with a list of all affected clients. So the tax agent out of the blue will have these template variable letters saying all these clients may or may not be affected, and that's what they think is enough notice to give. And that's just one campaign. We're seeing on multiple occasions through FOI where there are these letters that are purportedly being sent, but there's actually no record of them. And we've got taxpayers saying they never received them.
And that large withhold is a massive issue that we see because it's a huge shift for a business to go from paying monthly to weekly. And so there's weekly reporting and weekly paying. And so then if you don't do that for 2 months, you're not late on 2 months of lodgements, you're suddenly late on 8. And so then when we're trying to get arrangements in place, the non-compliance is 8 non-compliance markers effectively instead of 2, and where clients have switched from being on monthly compared to weekly, we often see them 3 months after that switch because they just can't catch up.
Any other questions at all?
So is you're talking about the criteria, like when they're reporting specific debts to the credit agencies. So is there any specific criteria like they're following?
It's over 100 grand business debt and over 90 days overdue. And if, you know, if there's not a payment plan in place or objection or whatnot, yeah.
So 90 days overdue, like the once debt is there, so there is no payment or anything between these 90 days.
Exactly.
If they pay like on the 89th, like 5 grand, then the 90 days start again?
No, so no. Good point. I've seen that.
Where the three of us like, oh, that might work.
I got a referral once where every day it'll be like $1,012 a week. Why didn't you just pay $5 grand a month or something? Oh no, it's my little tactic to no, it doesn't. I don't think it makes a difference.
And voluntary payments don't work either. So it's exactly what you were saying. So it used to be that businesses would often make, if they couldn't pay the full amount of their debt, they'd pay a voluntary payment every month or every week, and they would say, well, I'm keeping them off my back because I'm making these voluntary payments. That's not enough to stop any enforcement action at the moment, like the director penalty notices or the credit reporting. They have to be in a compliant payment arrangement to guarantee no further action. Full of good news today.
Yeah. Right, well, there's plenty of food, so feel free to hang around and chat and demolish some of the food. But thank you all for coming and joining us. Hope that was somewhat informative. If you've got any questions, we'll be hanging around, and you've got all of our details. Thanks very much.
Thank you all.
Thank you.